all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market. This book review is all about the 5 rules for successful stock investing by Pat Dorsey. These are the key takeaways from this book. By resisting both the popular tendency to use gimmicks that oversimplify securities analysis and the academic tendency to use jargon that obfuscates common sense, Pat Dorsey has written a substantial and useful book. His methodology is sound, his examples clear, and his approach timeless. Please do thorough research on business and make sure you understand it well. Find a good company with economic moats. Have a margin of safety. Hold for a long time. Know when to sell. Do not try to figure out the following Microsoft. Stick to business with economic moats. Learn lessons from the past and try to avoid them in the future. Be objective about business. Keep calm and stay away from crowd madness and emotion. Do not try to time the market. Never ignore the valuation part. Do not just rely on earnings when valuing stocks. This isn't just a game where one gets lucky by stealing or outsmarting the other person by correctly timing his buy, sell, but stock investing is a science. Though there are assumptions and speculations one needs to consider, there are objectively lousy right and wrong decisions that one could make. We see how stocks are always in the news and that we all work for companies valued at something. It takes a clear stance for Warren Buffett, buy wonderful businesses at reasonable prices, the type of value investing, as opposed to the gram low multiple, cigar butt type. If you choose this type of franchise investment, you also, per necessity, have to focus your research effort on finding that excellent business and securing that it stays that way. This is what Dorsey tries to do through this book's 5 rules. In short, they are: 1. Do your homework. Engage in the fundamental bottom-up analysis that has been the hallmark of most successful investors but has been less profitable the last few risk-on risk-off years. 2. Find economic moats. Unravel the sustainable competitive advantages that hinder competitors from catching up and force a reversal to the mean of the beautiful business. 3. Have a margin of safety, to have the discipline to buy a great company if its stock sells for less than its estimated worth. 4. Hold for the long haul, minimize trading costs and taxes and have the money to compound over time. And yet. 5. Know when to sell. If you have made a mistake in the estimation of value, and there is no margin of safety, if fundamentals deteriorate so that value is less than you estimated, no margins of protection, the stock rises above its intrinsic value, no margin of safety, or you have found a stock with a more significant margin of safety. There are several nuggets like, the bottom line about financial health is that when a company increases its debt, it increases its fixed cost as a percentage of total costs. That's why high financial and operational gearing combined with volatile sales is a potential corporate killer. A practice where you buy undervalued stocks that you can own long-term would serve the right person well if you got the stomach to stand the short-term movement of markets. Above all, this book reinforces the importance of being able to articulate one's investment strategy. If not, it's straightforward to get frustrated when the markets move against you, and this will make you move outside your core competence and unavoidably lead to trouble. This book gets you started. By avoiding specific sectors that fail to breed companies with a wide economic moat, one can expect better overall returns and reduce exposure to cyclical businesses. The market is very good at distinguishing good companies from bad companies. The stocks of good companies are expensive. You can rarely buy them cheaply. That's all. Thank you for watching. I hope you learned many new things about the stock market. Kindly subscribe to our channel and click the notification bell. Also, follow our Facebook page to learn more about the stock market.